So something I hear often is, isn't crypto like gambling? And how is it different from taking any other huge risk? Some of the returns you describe, like the 3x, the 5x, sometimes even the 10x, sound more like casino winnings than investment returns. So many financial advisors, and I especially experienced this when I was working at JP Morgan, generally advise retirees particularly to stay far away from crypto. They usually refer to it as like purely speculative. What would you say makes this legitimate investing rather than say pure speculation?
Well, to be honest with you, for most people, it is gambling. That simple. They buy based on social media hype, FOMO, what their friends recommend, but there is no analysis, there's no strategy behind it. So what is it? It's gambling, right? I mean, this applies also to stocks, to real estate. If you do not have done any research, if you don't understand it, by definition, you're gambling. What we teach is crypto investment strategy and how to manage properly a crypto portfolio, knowing its pros and cons as an asset class, I would say. And all of this is derived from the CFA principles that I learned.
See, I understand that, but I guess even with this analysis, aren't these kind of returns inherently speculative still?
I mean, yeah, it should be speculative, right? Any investment is, especially early stage. But remember, Amazon back then, it was highly speculative. Early investors who understood the potential of e-commerce made returns that seemed impossible by traditional metrics. The key is understanding why these returns are possible in crypto, and that's also what we teach.
But Tan, you know that there's thousands and thousands of cryptocurrencies out there. How can anyone possibly identify which ones will actually succeed?
So that's exactly where having a systematic approach, a strategy, makes all the difference. We don't even try to evaluate the thousands of cryptos out there. We have a rigorous filtering process that we call screening that narrows the field to only those who meet certain criteria that we're looking for, because in the past they have resulted in good returns for us, right? I can't say more because it's proprietary, but that's how the hedge funds operate as well. We look at technical fundamentals, we look at tokenomics, we look at team composition, we look at market positioning, and dozens of other criteria that our members now know very well because they're part of our research reports. We are looking for very specific patterns that have proven reliable over time. So out of thousands of assets, maybe 1% come across our desk. And then we conduct human, deeper analysis on that small subset. So each month, we end up recommending just a few out of 1,000 possible options.
But even with all of that analysis, surely there's still some significant risk involved.
There will always be risk in any type of investment out there. What you're looking for is, what level of risk am I ready to take for a certain expected return? It's the risk-reward equation. The key is you're not looking to completely eliminate the risk. You're looking to manage it through position sizing, through portfolio construction, and by knowing your exit strategies. This is another area I feel retail investors go wrong. They either bet too much on a single asset, or they spread themselves thin across, like, I've seen portfolios with like 50 projects in there, which is ridiculous. So we teach a proven system with specific allocations for your crypto portfolio, again, based on CFA principles. And that's all linked to investors' risk profile that we study.
So we both worked in finance, so I guess I have an idea of this, but how would you say that compares to, say, traditional investing approaches?
Well, it's extremely similar, right? As I'm saying, we both learned from the same principles, myself from CFA principles as well. And that's what we apply to just a different context, a different market. Think about venture capital firms as well. They make calculated bets on early stage companies, and they don't need all of them to win. They need just a few. And it just justifies in terms of returns because some will really overperform. So you can look at it that way as well. What we're doing is we're bringing that professional approach to the crypto markets, and we make it simpler, easier for our members to navigate.
So do you have, would you say, any final thoughts for someone who's maybe seeing crypto as purely speculative?
Okay, I would say this. Look at the history. All transformative technologies go through phases of adoption, and the early phases always appear speculative to outside observers. The internet looked like speculation, right, in 1995. A smartphone or cloud computing, the same in 2010. In each case, those who understood the technology and its potential were able to identify great investment opportunities. I think that crypto is following the same exact adoption curve. Keep in mind that, yeah, you had the early Google and Amazon, but then you had Facebook in 2004, you had Airbnb in 2010, and to this day, you have internet companies really doing well. So it's going to be the same thing for crypto, in my opinion, for the next decades.
Okay, so we'll move on to our next question.